So this is very important because a lot of folks are confused about the words hard money loans. So in today's conversation, I'm going to show you how to get a hard money loan with very poor credit. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous. If you were to ask me, if you are doing as great as I am, go grab a cup of coffee, or tea, or vodka, and let's roll. In today's conversation, I want to speak to you about how to get a hard money loan with very poor credit. Before we dive into how to get the hard money loan, you should first understand what this financial term means, right? So the words hard money refer to a set amount of money loaned to a borrower, you in this case, from a lender. And the terms can vary based on your specific situation, the lender, and any details set forth in the loan contract. So the thing here is that when you get approved from a hard money loan, you will receive the money in one lump sum. Very important. It's not about installment. You get the cash right away. And the lender will get monthly interest on your loan until it's completely repaid in full. With hard money loans, your financing is backed by a physical asset. Let me repeat that. It's very important. With hard money loans, your funding is backed by a physical asset. So the loan is collateralized. And the asset here can be typically the land or property you are purchasing. And standard loans are based on your credit score and may or may not include collateral as a condition for the loan. And you can find hard money loans actually offered by a constellation of players, private lenders, investor groups, and even some big traditional banks. So what is the purpose of a hard money loan really? Most real estate investors or new home buyers who need to build a home will use a hard money loan. And most traditional banks don't offer these loans because, again, it's very risky. They're trying to cover their butt here. It's very important. And the investment is really risky. So traditional banks are just staying away from that kind of funding space. So if you are a real estate investor and you need financing to purchase or build property, a hard money loan can make it easier for you to pay your contractors and get the job done. And that's what you want. You really want to finish the job so you can sell the house, or you can just lease it or rent it, right? And so a hard money loan is also an excellent solution for those who enjoy buying and flipping property to make a profit. So if you are in the fix and flip space, you might want to consider a hard money loan. And people who purchase properties to rent out for an income may also use a hard money loan until the property is stable. So those are, I'm just giving you some, the whole idea here. And some applicants with poor credit may also explore the option of a hard money loan, a hard money private loan, which is kind of similar to a hard money loan. I will just elaborate on that later on. So now that you understand the definition and the purpose of a hard money loan, let's just talk about the benefits of hard money loans. The thing here is that there are several benefits. The biggest benefits in our analysis is that the application and approval process is typically much faster than a traditional loan or mortgage. Your credit score would not have any effect on your approval odds either, and that's wonderful. So you have speed. You have the fact that your credit score is not touched. So you're not risking having a decrease in your credit score. That's fantastic. And for those who have adequate collateral to back the loan, a hard money loan may be the best, really. You can take the loan out against the property, and you may even get approved if you have a foreclosure in your history. One thing I want to tell you here is that make sure you talk to several lenders to find out what terms apply to the loan you need. And we also, in our analysis, another perk, another advantage you can find in hard money loans is the flexibility. Big banks are usually not as flexible when it comes to how or where you can spend your money. However, a hard money loan gives you the freedom to do whatever you want and need with the money you receive. And you also get funded fast with a hard money loan. In fact, these loans are signed and delivered more quickly than practically any other traditional loan. And we mean it, any other traditional loan. Since there is collateral involved to back the loan, it can be closed much faster than a mortgage or a personal loan from a bank. So how can you get a hard money loan? It's really the thing here is that I think now you understand that a hard money loan is not based on a borrower's credit, but instead it is based on the collateral you're able to offer. Okay, so if you have good collateral, you can get a hard money loan fast. In most cases, lenders look at something called the LTV, the loan to value ratio. And the LTV ratio is calculated to determine your amount and approval for the hard money loan. This ratio uses a percentage of the property value to make sure it's enough to secure the loan. If it's not enough, you might have to include personal assets in order to get approved. So even though hard money lenders are kind of cool with the property, with the collateral, they still want to cover their ass here, right? So they will basically tell you, hey, listen, if the LTV is 90%, but you can't, the property can't cover it, we want you to put some cash on the table. We want you to have some skin in the game. All right. And the LTV ratio is a measure of risk that all lenders use to calculate how much they will offer the borrower and if they will approve the borrower for the loan. Make sure your current property has a decent appraised value or that you have some other forms of collateral you can offer just in case. We've actually covered on other shows. There are some lenders that will cover an LTV of 100%. In other words, they're not asking you for any down payment. They will cover everything. Now, another question we want to cover today is, should you really get a hard money loan? It's all about what you are currently, professionally speaking, financially speaking, in terms of your vision, in terms of your life. Before you jump to an application, make sure getting a hard money loan is the right decision for you. Is it for flipping a house? Have you flipped homes before? Do you have any cash for additional financing? Because guess what? The lender is not financing everything. I mean, they might be advancing to you the hard money loans, but if there are extra funds down the road, the question will be, where would you get the cash, right? So short-term financing like flipping a house or updating a rental property will be a good time to look into hard money loans. That's for sure. If you're looking to buy a home to live in, consider a conventional, FHA, or another type of traditional mortgage. And if this is your first time house flipping, you might not qualify for a hard money loan because this type of financing is better for someone who's done this before instead of someone who's going out, he's just starting afresh here. And whether it is for a down payment or covering what a hard money loan won't, you will need to have funding from an alternative source for other things. Otherwise, you might have to resort to taking out an additional loan. So if your property doesn't sell right away, guess what? You might be on the hook for more money than you had originally planned, and having money for a down payment or whatever a hard money loan won't cover might be the determining factor between getting approved and denied for a hard money loan. And what important facts you need to know when you are thinking about hard money loans. If you still not sure if a hard money loan is right for you, there are several crucial facts to keep in mind. These types of loans are considered short-term loans with a repayment length of maybe 5 years or less. Okay, 5 years or less, 60 months or less. Another essential thing to be aware of is that a hard money loan has a much higher interest rate than most traditional loans. And the cost to repay your loan could add up quickly as time goes on. So you want to use a hard money loan with discretion. On the other hand, if you can't obtain financing through other means, a hard money loan can be an excellent alternative. And this kind of loan is very common with real estate investors and those who are looking to work on an investment property project. And again, this is simply because, as I said earlier, most traditional lenders shy away from this type of loans, while a hard money lender does not. So if you need, let's say you need financing for a construction project, a hard money loan is an excellent way to go. And this is kind of loan, and I just want to close here to say that hard money loans are not backed by federal agencies, but instead they are secured by third parties such as private investors and private lending firms. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Studio Kiwi Show. We are still having a conversation about how to get a hard money loan with very poor credit. So, another question I want to address today is how can you get approved with the best terms? In other words, you're trying to get approved for a hard money loan, but you want to get it again with the best terms in terms of APR, in terms of fees, right? In terms of the loan term, that kind of stuff. So when you apply for a hard money loan, you definitely need some sort of collateral along with a solid business plan. Very important. This information will give the lender confidence and make it clear what you intend to do with the money you receive. Most lenders require around 40% of the funding to come from you, the borrower. It can go all the way to 0%. As I've said before, you have some lenders who are comfortable funding the whole thing, but it's all about the solidity of your business plan and also the attractiveness of the underlying collateral, underlying asset. So you likely may not receive 100% value when you apply for it. It is important to know that the amount of money you get approved for it can vary between lenders, so make sure you shop around. And you want to be ready to discuss your current financial information and provide the necessary documents to your lender. And here I'm referring to things like recent bank statements, W-2 forms, and pay stubs, or tax returns for the last three years. And this is not just you. This is not just for your. This is not a request that will come from your lender. It's just common practice for most loans, including hard money loans. And if you have a solid standing financially, you will likely have better rates and terms. And once you are approved for the loan, I think it's important that you start to work on your project right away. Because keep in mind that these are short-term loans, so the faster your project is completed, the less you will pay in fees and interest charges. And trying to communicate with your hard money lender, and you just want to let them know, you want to keep them in the loop, let them know where you're with your project. If they request any information from you, make sure you provide the info ASAP. Because the sooner you can get your project completed, the sooner your hard money loan will be paid in full. And how can you get it? And I promised you that I was going to talk to you about how to get 100% financing with a hard money loan. Let's talk about that. There are a few ways to make sure you get 100% financing in your project. Make sure your deal is less than 70% ARV. So ARV stands for after retail value. So your ARV should be less than 70%. That includes the property purchase price, rehab, and loan cost. Keep a solid credit score. So while a good credit score is helpful to get a traditional loan, it is also a good idea to have one for a hard money loan. You can still get a hard money loan with fair or poor credit. Don't get me wrong. And this is the title of this show is about getting the hard money loan with very poor credit. But you might not get 100% financing. You also want to have some experience. Very important. Many hard money lenders will not give money to borrowers if this is their first time flipping a house. Have the experience of house flipping so that you can actually build a solid application. And one thing I also want to say here is that please be flexible in coverage. Some hard money lenders will cover the purchase price but not other expenses like repair costs, for example. You might have to cover some of the cost out of pocket, maybe business or marketing costs. So with that being said, 100% financing might be different depending on the lender. And consider the limits. Don't be surprised if a hard money lender has a maximum loan amount you can get. If your property is worth more than the limit, you might be able to get the max loan amount, but not have it cover all your necessary costs. Another thing I want to talk about here is that what are the best hard money loans with 100% financing? Okay, because this is really something that's very important to us. There are lenders out there that will give you that kind of financing. So we've found 3 great lenders that are ready to provide hard money loans with 100% financing to people who have very poor credit scores. So first we have Do Hard Money. And Do Hard Money, you have they actually cover the property types finance, non-owner occupied, loan amount from $50,000 to $5 million, ARV, the after retail value minimum of 70%, with a minimum of $75,000. The interest rate 1.25 to 1.5% per month. So this is around 15% per year average. In terms of fees, you have the points, you have 5.5 to 6.5. There is no prepayment penalty, and the loan terms up to 5 months. Okay, think about that, 5 months. And the time to fund an average of 12 days. So that's for a lending, that's for a do hard money. We have lending one. Lending one, the properties, let's just talk about the rates and terms. So property types financed, non-owner occupied. Also have rental property loans available. Loan amount 75,000 to 4 million. The ARV up to 74%. The interest rates starts at 7.49%. The fees, you have origination fees from 1.75 to 3%, and the loan terms up to 12 months. Okay, and the time to fund as low as 10 days. The third company, the third lender we have found in terms of hard money loans is AMZA Capital. And the AMZA Capital rates and terms, property types financed, non-owner occupied. The ARV, you have up to 80%. This is pretty cool. Interest rates 7 to 12%. The fees 2 to 6%. And the loan terms up to 12 months. And time to fund 2 weeks. So you kind of have an idea of the minimum amount and the maximum amount when it comes to those the hard money loans. You also have the time to fund, so somewhere from 7 days to 2 weeks. You also have the loan terms, and loan terms actually never exceed, at least for those three lenders that we have just shared with you. Those the loan terms do not exceed 12 months. Okay, so just kind of give you an idea of what you're looking at in terms of hard money loans with very poor credit. I want to close this conversation by saying that basically I've been telling you that there are ways to actually. I've been telling you two things. First, that there are some hard money lenders who don't cover the whole loan, so they will probably cover 80% or 70%, and there are lenders that basically will cover everything. So in case you have a hard money lender who wants you to pitch in terms of have some skin in the game in terms of your finances, like some kind of to put some down payments, you actually can finance your down payments. And so how can you fund your down payment if needed? Traditional mortgage lenders usually require a down payment. Hard money lenders are not obligated to, but some do. So if your hard money lender requires some upfront cash, you can get it from a few different places, including a credit card cash advance, right? This is not really our top priority here, our top suggestion here, because this could be very expensive, right? I mean, you can borrow money from your credit card to pay the cost of a down payment using an advance from a credit card. Keep in mind that there are typically fees associated with taking out a cash advance, and sometimes APRs for cash advances are way higher than what you would pay for on regular purchases. You can also actually take out a personal loan to finance the down payments on your hard money loan. It really depends on your personal situation, the choices available to you there, and you can also borrow from friends and family if you have a good entourage. I'm speaking here in terms of financial stability. If you actually, this could be the cheapest option for you. If your parents or your spouse or your colleagues or your friends, if anybody if you have access to what I call the private loans, and I would say go ahead and do it. You can also fund your down payments through something called a HELOC. So a HELOC is a home equity line of credit. Now, this could be very helpful if you already have a primary residence. Your home is used as collateral and there is less red tape to go through. Interest rates tend to be lower since your home is used to secure the loan, similar to a hard money loan. But there is a risk here, though, folks. If you don't make timely payments on your HELOC, though, your home can be seized. So you want to use this if you are confident in making payments to both a HELOC and your hard money loan at the same time. You can also finance your down payments through a PLC, a personal line of credit. So the personal line of credit is kind of similar to a HELOC, and it's still a revolving line of credits, but you might face higher interest charges compared to a HELOC because it is an unsecured line. It also means your credit score and credit history are more heavily scrutinized to see if you are worthy of lending money to. Also, you might think about 401k financing. So you can use your retirement savings as a down payment in a few different ways. You can take out a 401k loan if your provider allows it and make payments according to the terms your 401k provider sets. You could also use a distribution from your 401k if you are using it as a first-time home buyer, which means you don't have to repay it. Generally, though, you should keep taking money from your future self because there is no way to make up for the money you've earned due to contribution limits. And you can also tap into a business loan or a line of credit. All right. So for house flippers that do this full time, instead of something you do on the side, you might have a full-fledged business to run. If you need a down payment for your hard money loan, look into a business loan or a line of credit. Business lines of credit like HELOCs and PLCs allow you to borrow only what you need, in this case, just enough for a down payment. So, and the cool thing here is that as a company, you may qualify for this alternative funding method. All right, folks. This was it for today's conversation. I was having a quick convo with you about how to get a hard money loan with very poor credit. So I spoke about what is a hard money loan, what is the purpose of a hard money loan, what are the benefits of hard money loans, how can you get a hard money loan, should you get a hard money loan in the first place, what important facts should you know about those kind of loans, how can you get approved with the best terms, how can you get 100% financing with a hard money loan, what are the best hard money loans available out there with 100% financing, and how can you fund your down payments if needed. Thank you so much for your attention. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.